Number 31. A total of 86,000 Rand was spent on stationery during the year. Stationery to the value of 82,600 Rand was used during the year. So we've got to calculate our consumables on hand. You're going to take your balance of 86,000 Rand that was used during the year. You are going to subtract the value that was used of 82,600 Rand, and that difference of 3,400 Rand is your consumables on hand. So your two ledger accounts will be consumables on hand and stationery. Consumables on hand is an asset, and it will have a positive effect. Stationery is an owner's equity, and it will also have a positive effect on your owner's equity. So let's record this onto our worksheet. The journal involved is your general journal. Your source document is your journal voucher. Account to be debited is consumables on hand. Account to be credited is stationery. Equity will be credited with 3,400 Rand. And assets will be debited with 3,400 Rand. Number 32. The provision for bad debts must be reduced by 680 Rand. So your two accounts that you will open will be called provision for bad debts, and the other ledger account will be called provision for bad debts adjustment. Provision for bad debts is an owner's equity, and it will have a positive effect on owner's equity. Provision for bad debts adjustment is an asset, and it will have a negative effect. So let's go put this onto our answer sheet. So the journal involved is your general journal. Your source document is your journal voucher. Account to be debited is provision for bad debts. Account to be credited is provision for bad debts adjustment. Your equity will be credited with 680 Rand. And your asset will be debited with 680 Rand. Number 33. Debtor's allowance of 22,000 Rand must be closed off and transferred to the sales account. So your subsidiary journal is your general journal. Your source document is your journal voucher. Account to be debited is your sales account. Account to be credited is debtor's allowances. And it will be 22,000 Rand in your debit and credit column of owner's equity. Number 34. The net sales for the year amount to 877,500 Rand. Transfer the gross profit from the trade account to the profit and loss account. So it will involve a calculation. We first need to calculate our gross profit. Now our gross profit has a formula. We know gross profit is sales less cost of sales. Now they've given us the sales of 877,500. Although they haven't given us the cost of sales, we know that our markup was 35%. So in order to work out our cost of sales, we're going to say 877,500 times 100 divided by 135, and that gives you 650,000 Rand. So our gross profit will be 877,500 minus our cost of sales of 650,000, which gives us a gross profit of 227,500. The two accounts that you will open is called your trade account and your profit and loss account. So let's put this into our answer sheet. The subsidiary journal involved is our general journal. The source document is our journal voucher. The account to be debited is our trade account. The account to be credited is our profit and loss account. 227,500 Rand will be debited as well as credited in my equity. Number 35. The net profit percentage on turnover for the year is 14%. Transfer the net profit from the profit and loss account to the capital account. So we're first quickly going to have to calculate our net profit. Our net profit is, we will take our net sales and we will times it by the percentage given, which was 14%. So our net profit is 877,500 times 14%, which gives you 122,850 Rand. So let's go put this into our answer sheet. The two accounts that we will open is a profit and loss account and a capital account. They are both owners' equities. So on our answer sheet, the subsidiary journal is our general journal. The source document is our journal voucher. The account to be debited is profit and loss account. The account to be credited is our capital account. And it will be debit and credit owner's equity of 122,850. Exercise 1.2. Required. 1.2.1. Analyze the given transactions according to the correct headings on the answer sheet. 1.2.2. The internal auditor is not satisfied with the way cash that is received by the business is handled. Provide 2 internal control measures that should be implemented to ensure proper handling of cash. 1.2.3. Corporate governance refers to the way a business must be managed to achieve its goals and to still adhere to socially acceptable norms and standards. State 4 primary principles of good corporate management that is set out in the King 5 report. Transactions. Number 1. Make an EFT to Arn Stores for delivery fees on inventory purchased, 450 Rand. Number 2. Issue a credit note to Hendray Traders for goods returned, 870 Rand. A profit margin of 16% on the cost price of goods is maintained throughout. Number 3. Receive an EFT of 300 Rand from E. Botha regarding his debt of 500 Rand that was previously written off as irrecoverable. Number 4. During the calculation of the monthly salaries, the pension fund has been calculated at 8% of gross salaries instead of 6% and posted as such. The gross salaries of the month were 250,000 Rand. The employer does not contribute, corrects the error. Number 5. Make an EFT to ABSA, 12,875 Rand, to pay the final installment on the loan, as well as the interest for the last 4 months at a rate of 9% per annum. Number 6. The allowance for bad debts account shows a balance of 5,960 Rand. Outstanding debtors amount to 67,000 Rand. Adjust allowance for bad debts to 8% of debtors. Number 7. Bank fees according to the bank statement. Service fee 210 Rand. Fees on credit card transactions 130 Rand. Electronic banking fees 87 Rand. And sundry debits 93 Rand. Number 8. The bank statement shows a credit with regards to interest 920 Rand. Number 9. Receive a debit note from the bank relating to a rejected debit order from a debtor for 2,400 Rand. Previously, he settled the debt of 2,900 Rand with this debit order, and the transaction was wrongly recorded in the cash receipts journal on that date. Number 10. Withdraw an amount of 625 Rand from the bank account to restore the petty cash interest amount. Number 11. Interest on fixed deposit of 650,000 Rand is outstanding for 2 months at an interest rate of 4.5% per annum. Go to your worksheet for exercise 1.2.1 and then let's quickly classify our assets, equity and liability section part of the worksheet. We know assets, the signs will be plus minus. Equity, the signs is minus plus, and liability, the signs is also minus plus. Now let's read number 1. Make an EFT to odd stores for delivery fees on inventory purchased R450. Delivery fees forms part of inventory. So the two ledger accounts involved will be inventory and bank. Now we know both of these accounts are classified as assets. So the account debited is inventory, the account credited is bank, and it will be plus R450 in the asset section, and the debits, as well as R450 under credits. Number 2. Issue a credit note to Henry Traders for goods returned R870. A profit margin of 16% on the cost price of goods is maintained throughout. This transaction will involve 4 ledger accounts. The first 2 ledger accounts will represent the selling price, that is the return made by the debtor, and the second 2 ledger accounts will involve the cost price. So let's have a look at the first 2 ledger accounts. Because the debtor is returning stock, the first account will be debtor's allowances and the second account will be debtor's control. Debtor's allowances is an owner's equity and it will have a negative effect. Debtor's control is an asset and it will also have a negative effect. And the selling price is R870. So let's go record that onto our answer sheet. So the account debited is debtor's allowances. The account credited is debtor's control. Assets will be credited with R870 and equity will be debited with R870. The second 2 ledger accounts involve the cost price. So we are first going to have to calculate the cost price. So in order to calculate the cost price, we have to take the markup into consideration. The calculation said 16%. So you're going to take your selling price of R870, you're going to times it by 100, and you're going to divide it by 100 plus 16. So your cost price is R750. Now that we have the cost price, your 2 ledger accounts involved will be inventory and cost of sales. Inventory is classified as an asset. Cost of sales is classified as an owner's equity. So let's go put this into our worksheet. The account to be debited is inventory. The account to be credited is cost of sales. R750 in the debit side of assets and R750 on the credit side of equity. Number 3. Receive an EFT of R300 from E. Botha regarding his debt of R500 that was previously written off as irrecoverable. You are now receiving money from a debtor that you previously wrote off. Although you are not receiving the full R500, we will record the payment that we did receive, which is R300. So in this case, your 2 ledger accounts will be bank and bad debts recovered. Bank is classified as an asset and it will have a positive effect. Bad debts recovered is classified as an owner's equity and it will also have a positive effect on owner's equity. And the amount that we will take is R300. So let's go put this on our worksheet. The account to be debited is our bank account. The account to be credited is called bad debts recovered. R300 on the debit side of assets and 300 Rand on the credit side of equity. Number 4. During the calculation of the monthly salaries, the pension fund has been calculated as 8% of gross salaries instead of 6% and posted as such. The gross salaries of the month were 250,000 Rand. The employer does not contribute, correct the error. So first of all, we need to calculate our gross salary. The gross salary is 250,000 Rand times 6%, which is 15,000. That is what we should have recorded. But what did we do instead? We unfortunately took 250,000, we multiplied it by 8% and got an answer of 20,000 Rand. So the difference between 20,000 Rand and 15,000 Rand is 5,000 Rand. And this 5,000 error now needs to be rectified. So we are going to open two ledger accounts, the first one being known as pension fund, and the second one is called creditors for salaries. They are both liability accounts. So let's go put this into our answer sheet. So the account to be debited is pension fund. The account to be credited is creditors for salaries, and it will be 5,000 in the debit column of liabilities as well as 5,000 in the credit column of liabilities. Now we have rectified this error. Number 5. Make an EFT to ABSA 12,875 Rand to pay the final installment on the loan, as well as the interest for the last 4 months at a rate of 9% per annum. This one is quite tricky because they do not give you your loan amount. They simply give you a total of your loan amount plus your interest on loan. So first of all, we're going to have to do an interest on loan calculation using a formula to solve for X. We know interest on loan, you always take your loan amount, you times it by the interest percentage times the number of months. So we're going to use that same formula, but instead of knowing the loan amount, we're going to call it X. So we're going to say X times 9% times 4/12. We also know that the amount given of 12,875 is our loan plus our interest on loan. So now we're going to put this all in one big equation. So we're going to say 12,875 equals our loan, which we say is X, plus our interest on loan, which is, in brackets, X times 9% times 4/12. Then we solve for X. Once we solve for X, we get an answer of 12,500 Rand. So in other words, of the amount of 12,875 Rand, the loan amount was 12,500 Rand. So the difference is 375 Rand, and that difference is our interest on loan. So this will have two transactions. Our first two ledger accounts will be the recording of the loan. So our first account will be loan, and our second account will be bank. Loan is a liability, bank is an asset, and the loan amount is 12,500 Rand. So let's go put that into our answer sheet. So the account to be debited is loan. The account to be credited is bank. 12,500 Rand on the credit side of assets, and 12,000 Rand on the debit side of liabilities. The second part of the transaction is the interest on loan. So our first ledger account will be interest on loan. Our second ledger account will be bank. We know interest on loan is our owner's equity, and bank is an asset. And the interest on loan was 375 Rand. It was the difference between 12,875 Rand given and the loan amount that we calculated as X of being 12,500 Rand. So the account to be debited is interest on loan. The account to be credited is bank. 375 Rand on the credit side of assets and 375 Rand on the debit side of equity. Number 6. The allowance for bad debts account shows a balance of 5,960 Rand. Outstanding debtors amount to 67,000 Rand. Adjust allowance for bad debts to 8% of debtors. So before we can record this on our answer sheet, we quickly first need to calculate our provision for bad debts. The amount given is 67,000 Rand that's outstanding, and it must be adjusted to 8%. That gives an answer of 5,360 Rand. But we have provided a balance of 5,960. So the difference between 5,960 and 5,360 is 600 Rand. We need to adjust that provision. So the two ledger accounts involved will be provision for bad debts and provision for bad debts adjustment. Provision for bad debts is classified as an asset. Provision for bad debts adjustment is classified as an owner's equity. Assets will have a positive effect, and owner's equity will also have a positive effect. So let's go record this onto our answer sheet. So the account to be debited is provision for bad debts. The account to be credited is provision for bad debts adjustment. Assets will be debited with 600 Rand, and owner's equity will be credited with 600 Rand. Number 7. Bank fees according to the bank statement. Service fee 210 Rand. Fees on credit card transactions 130 Rand. Electronic banking fees 87 Rand, and sundry debits 93 Rand. From grade 10, you must remember that we're going to add up all of these fees and we are going to call it bank charges. So bank charges will be 210 plus 130 plus 87 plus 93, so it's a total of 520 Rand. The two ledger accounts involved in this transaction will be called bank charges, and the other account is called bank. Bank charges is an owner's equity. Bank is an asset. Both of these will have a negative effect in our accounting equation. So let's go enter this into our answer sheet. The account to be debited is bank charges. The account to be credited is bank. Assets will be credited with 520,000. And equity will be debited with 520,000.